Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions. It's generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, and see what people are sharing. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities. And that is where I think the value is. I find really good companies, and I think we get really good entry points for this commodity bull market that we are in. So Grady, we're going to start here. Silver is down 5% and SILJ is only down 1%. Are you seeing this? The miners are talking to us. The miners are not buying the drop today in the metals. Silver is setting up to break 32.77. One can really feel the tension in the sector here. Let's see what happens when the USD backs off, when that dollar backs off. I completely agree with him. I was looking at some of the silver companies. They were looking pretty good. They are not following this big move down in silver. So people are accumulating the silver mining companies, and some, even the junior companies, didn't look that bad. With silver down 5%. And that's the difference between a rookie investor and more of a seasoned investor. You start to see divergences in the market as a more experienced investor. You want to see if we're at a top and we're going to get a big sell-off, usually you see the equity sell off hard. We're not seeing that because we're not at a top. We are most likely going to go higher. And Grady sees what I'm seeing, which is good. Casper says this is the gold priced in dollars divided by the consumer price index. And it says one of the biggest inverse head and shoulders triggered this year. Target is 7 times from its neckline breakout in favor of gold versus inflation. The outperformance will be staggering. And the inflation might be big or small, but gold's going to take it and rip. This is an extension of the market conditions we are in. If you look at history, when gold did incredibly well, it outperformed inflation during those timeframes. That occurred in the 1970s when gold was freely traded. It absolutely smoked inflation, had a gigantic bull market in gold. Gold went up 25x itself, the commodity itself. Silver did a 50x back here. Do you need much more leverage than the physical metal? Not really. But there were some mining companies that went up many hundreds of folds. Some even went over 1,000x. 1,000, yes. We had the lowering of interest rates, inflation out of the system, and that gold was fully valued here and went all the way back down. In 2000, 99, 2000, it bottomed and we worked our way back up again. Another huge bull market from 2000 to 2011. We've got a nice cup and handle pattern that's just broken to the upside. Your projected move is from 2000 to 2011, could be one of your projected moves. Your other projected move is the size of the cup from the bottom up, and then you project that upward, which means either direction you take there, either projection you have, we've got a long way to go higher in gold versus inflation. And that's generally when gold really takes off. So I am still a mega bull on gold and silver. Mega bull. Grady says precious metals and the platinum group metals often take you to the edge and over the edge. The bull simply wants as few on board as possible in playing the precious metal and PGM metals. You need your big pants on. And if you focus on bias, emotions, macro overthinking, the why, news, etc., you will struggle. So stay long in this precious metals bull is what he is suggesting. I would suggest that as well. I think the conditions are here. The charts are breaking to the upside. Just do nothing. And that's the hardest thing to do, is to do absolutely nothing. People want to fidget with crap. They want to sell this over here, buy this over here, swap this. This is going up. This isn't going up. So I'm going to go chase that price performance. It's all garbage, guys. It looks good. You've broken the patterns. We're going higher, is what my guess is. And I think that's what Grady's is as well. And this is where you just got to sit and do nothing if you've already positioned in precious metals and the metals mining companies. And miners, again, guys, miners are so stinking cheap. This is where big money could be made. It's not about knowing the future. It's about putting the favorability in your camp. And if miners are this cheap and we've got a big bull market potential with gold starting to outperform inflation, that's your miners' margins. So we could see the biggest miners bull market that most people have never seen before. Maybe the older generation, they saw the 70s, but a lot of us have never seen a bull market like this, I think, coming. We haven't experienced one yet. Here's Porter Stansberry. I'm going to talk about this because this is the problem that America is in, and it also impacts a lot of our investments. He says, America is in big trouble, and no matter who wins this election, here are some numbers that matter a lot more than the polls. Direct transfer payments by the government is $3.8 trillion, 48% of all government spending. Income taxes are $2.3 trillion. It's trillion, not billion. These payments go to 67 million Americans. Simple question. If you're paying more than we're collecting to 67 million people, what are the chances they vote to stop doing that? What about the people who work for the government? Is there any chance that people who depend on the government for their financial lives will vote to decrease its size? That's 25 million Americans, or about 20% of the entire workforce. And what about the people who don't work? There's 24 million people who are of working age in America, but that doesn't work. But that don't work. They don't work. Do you think these students and artists who live on loans they won't repay are going to vote for less government? When you look carefully at our demographics, you discover some very unsettling facts. There are only 70 million actual taxpayers out of the 134 million full-time workers. Do you think the roughly 60 million people who do contribute to society but don't currently have to pay taxes are going to vote for less government? I don't. In other words, when you add up the people who work for the government, which is 25 million people, or who receive direct payments from the government, 67 million people, or who don't work at all, 24 million, or who don't have to pay taxes, 60 million, you end up with a figure, 176 million, that's essentially impossible to beat at the polls. And then there's this. As of this year, there are now 51.6 million immigrants in the country, 15% of the population. That's the most we've ever seen, the largest 2-year wave of immigration ever. You'll never guess who they are going to vote for. In 1950, 89% of Americans were descendants of Europeans with a common religion of Christian, a common heritage, and a common culture. We were also incredibly intelligent, hardworking, and law-abiding. We need 6 million government workers, 4% of the population, to keep the peace. Today, only 61% of Americans share that common heritage. And for the first time ever, the number of white, native-born Americans declined from the 2010 consensus to the 2020 consensus. Today, we require 25 million government workers, or 7.6% of the population, to keep the peace barely. For those who think democracy can work in a multicultural state, I invite you to visit Iraq or South Africa or the Balkans or virtually anywhere else it has been tried. Nation states work when there's a dominant nation, a tribe of people with language, culture, and history in common that creates a government. What comes next for America will be a long period of suffering and more violence between those who are part of the regime and those who suffer from it. They won't stop shooting your candidate. They won't stop censoring your speech. And sooner or later, they won't stop stealing your property and throwing you in a hole, says Porter Stansberry. I like that because he's right. I'm going to come back this direction through that. So coming down next to Grady, he said 5 trading days ago that, and now let's see if silver needs a daily cycle decline pink route before it breaks out above the 32.77 level for a move to 35.42. Today's silver drop followed the pink route, which is a back test. Miners are holding. Coming down to energy headlines, it says EIA global oil demand at 104 million barrels per day and global oil supply at a little under 102 million barrels per day in September of 2024 as we continue to run a deficit and eat through inventories. Grady says inflation is normally a sign of increasing demand and a reasonably healthy economy. The inflation we are getting now is not. It is grounded in debt and currency debasement war. Hard assets is the way to go. Do not miss this commodities bull market, as it will literally save your life. That is how important it is. And what I think he is thinking is that we are going to get some massive currency debasement. Financial assets do not do well in massive currency debasements. The only way to maintain your purchasing power, I think, is what he's saying, is to buy hard assets, precious metals, and all of the things that you drop on your foot and hurt. Christine Guerrero says, efficiency gains, question mark, what efficiency gains? Single well productivity has been flat for 3 years. It seems those efficiency gains were actually Dukes drilled uncompleted wells. U.S. shale bubble is bursting. What's going to happen if this shale cannot grow? We're not going to be able to grow probably world oil production, at least not at the prices that we're at. Christine again, U.S. shale well drilling and completions are expected to trend down in the years ahead. If this forecast is correct, U.S. oil production has peaked and will decline in the years ahead. EIA Gov, are you listening? So if we see less and less drilling activity, we are most likely peaking in shale oil production. We need prices to go up and we need a turn in oil production if we want to produce more oil. Brady says, posted that orange back test for oil would most probably hold. It has. Oil is at a present back in the purple triangle, and oil rising again is another sign the second inflationary phase is starting. At least $250 to $300 oil during this bull market. Commodities bull is a lifetime opportunity. So he's also in the camp that we get much higher oil prices like myself. What I hope occurs is that we don't go there fast. I want a nice, slow grind higher. Why is that the case? Because oil companies make their money off of the volume that they sell per day. So if they sell, we want prices to be up, 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 up. And the money that these companies are going to make is going to be a lot more. It also won't shock the system. So if we go to $250, $300 a barrel oil by 2030, and we go slowly up there where we gain, 5, 10% a year or 20% a year to get there, then we're cool. We're cool. And the oil companies make an absolute killing. So that's what I want to see. Because I'm in the oil companies, I get dividends from it. Go up slow. Let's make a whole bunch of money from the oil companies. Perfect. But again, nothing goes up in a straight line. I'm sure we'll get a lot of pullbacks along the way. What he says here in the red, it says, this is one of the many charts I used to call the commodities bear market low back in 2020. When the second pink head and shoulders broke down, I understood that the massive, symmetrical, and stylish blue head and shoulders probably was going to play out. The SHS, and then the smaller SHS in the pink. And here we are, heading higher again. Coming down to SRS Rocco, he says, amazing how the gold price has trended with the oil price spikes in the 70s and 2000s. Same with silver. Without energy, there is no economy, metals, or asset values. Unfortunately, The hundreds of trillions of financial liabilities masquerading as assets will get into serious trouble as the world heads over the energy cliff. When the market realizes energy is what provides assets their true value, then we will see funds flow into physical gold and silver to protect wealth when U.S. Treasuries, the current highest quality collateral in the world, no longer holds that function. So that's kind of what he's thinking. It says the gold price has trended with the oil price spikes in the 70s and 2000s. The Kobayashi letter, it says over the last decade, gold prices have more than doubled, marking one of the best rallies in modern history. Over the last 5 years alone, gold is up 76% in the track to be the best performing asset class of the year, excluding cryptocurrencies. So here's gold at record high, hedge against debt, deficit, and debasement. Boom, boom, boom. Here we go. Coming back. We've got another one from Christine. It says U.S. shale oil is only going to get more expensive to produce, and we will be at the top of the global cost curve in the next decade. Seems slowly people are seeing through U.S. shale propaganda. Here we go. It's going to get more and more expensive. Jim Willie, so let's read this one here. He says, we are standing on the brink of a monumental shift, and it's not just about gold and silver. The paper-based financial system that the West has manipulated for decades is now crumbling under the weight of platinum, palladium, and other precious metals. As Russia, China, and Iran continue to accumulate these assets, they are delivering a crushing blow to the Western economies. Platinum is the lifeblood of industrial giants, and palladium plays a critical role in the automotive and technology sectors. The West's production and supply chains are becoming vulnerable as these nations secure more control over these crucial resources. If they keep stockpiling, it will severely weaken Western industries. The Western central banks can't simply print more dollars to solve this. The value of silver, platinum, and palladium will surge, igniting a new wave of inflation in the West. Banks, investors, and the public will scramble for assets with real value, and the illusion of paper money will be shattered. Silver, gold, platinum, palladium, all of these metals are paving the way towards the West's collapse. The unstoppable rise of these precious metals has begun, and it's only a matter of time before the West is forced to face this inevitable reality. I agree with that. Also why I like physical metals. Here's one from Northstar, and this is stock markets to fall 50% or more as gold and silver rise by hundreds of percents. Quite a few people disagreeing with the attached post, and even saying 0% chance. Please study the evidence. It's becoming highly likely. And this is the distance from the 10-year moving average indicator. It is falling below a key threshold point. We are also seeing the Dow start to underperform gold, or said differently, gold starting to outperform the Dow. And we're starting to break down where the gold price is going to start to outperform the Dow. This ratio historically has happened during big commodity bull markets. What he says here in his words, the red capital rotation events lead to stock markets rising for many years and precious metals entering prolonged bear markets. That's the big red capital rotations. The green capital rotations are events lead to stock markets falling 50 to 80% and taking a decade or more to recover those losses, while gold and silver rise hundreds of percents. This indicator has given zero false signals. Zero. When it rises above the zero line after spending years below it, stock markets are in a huge bull market and precious metals are in a bear market. Conversely, on the green section, when it falls below the zero line after spending years above it, stock markets fall 50 to 80% and precious metals rise hundreds of percents. So we are starting to fall below the zero line right now, and that is when gold and silver rise hundreds of percents against the Dow. And the Dow could easily fall quite a bit here. Investment wisdom, Charlie says, the record shows the advantage of a peculiar mindset, not seeking action for its own sake, but instead combining extreme patience with extreme decisiveness. Extreme patience is where you get rewarded, guys. And that's where we're going to end it. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And we'll catch you guys later. This is Finding Value.